The market looked like it wanted to roll over, but then earnings came in, and that was it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on YouTube and you haven't done so already, then make sure you get down there and you hit that like and subscribe button. Click the little bell icon next to it to make sure that you get notified every time we upload a new webinar here on the channel, because you're not going to want to miss out, because this market is going absolutely nuts. Now, there were a lot of things that drove this push here because, man, it sure looked like we were ready to roll over. You know, coming in here Wednesday, a nice big red day, and then Thursday and Friday, and we hit another new all-time high on the S&P 500 because the steamroller just can't be stopped. We just keep on trucking along here with the S&P 500, but this is not just, random buying, risk off attitude. There is a lot behind this. Now, first off, we have the jobs report, right? A lot of these things came out on Friday, which really fueled this run up. Jobs report was fantastic, is basically the best way I can describe it. Expectation was adding 187,000 jobs. The report stated that they added 353,000 jobs in January. I don't know how accurate that number is, and maybe they'll come back and revise it later. Yeah, that definitely made things go. Unemployment rate was 0.1% lower than expectations, so that was really good. It basically, stated that, in the last 37 consecutive months, the U.S. economy has added jobs, but yet we see widespread layoffs from some pretty big companies out there, letting people go. I know there's a huge, announcement with UPS that they're going to be laying a lot of people off. If I'm not mistaken, Meta let a lot of people go. There have been a lot of layoffs out there, but yet the economy is adding more jobs. At least that's what they say. Going back to it here, so those were kind of the big, economic dates that we had towards the end of last week that fueled this rally. But then the other thing that we had that really, I think, was what set the, set the stage was earnings. So we had massive earnings beats from platforms like Meta. Huge beat by almost about 40 cents per share on EPS. Revenue was up, so Meta went absolutely nuts. Amazon did great, and then of course Apple, the big boy in the market, also beat EPS and revenues. So really big earnings companies here coming in hot and really fueling this rally here going into Thursday and Friday. So that is really what's going on as far as what's pushing the market upwards here, even though we had that rollover here onto Thursday. On Wednesday, and then Thursday, of course, we started that rally, and Friday with all the data and the earnings, it was enough to just push us to a new all-time high. Let's take a look here at the breakdown for the S&P 500 and take a look at the big picture first, and then we'll zoom in for the year to date. And I mentioned those earnings, and look at those sectors jump. It looked like tech was starting to roll over here coming into Wednesday, and then oof, we hit the rocket ship. Same can be said for communications, because obviously we had some big communications names reporting, and a lot of things kind of rolled with this rally, and we're getting a bit of a sympathy move out of it. We see here, consumer discretionary coming up, healthcare, financials, consumer staples, energy, real estate, and utilities. Didn't quite get as much juice out of it, compared to tech and communications, but still, a very nice move up. Let's take a look here at the year to date to get a better picture of this. And yeah, look at that move in communications. That is just nuts. Going into, Wednesday, obviously here we're sitting right around 5%, and now we jumped up almost over 10%. So basically doubled in the course of 2 days, after Wednesday. Tech, of course, got a little boost too, and the S&P 500, responded in kind. So that was really, really good here. We see financials, kind of holding steady. Most of these holding steadies, though we do have the consumer discretionary starting to push up over the zero line here, while energy, utilities, and real estate all below the zero line and underperforming the S&P 500 at this point. All right, let's move on to the asset classes. And it looked like oil was going to keep going, but man, what a rollover here going into the close. Now, be aware of certain things going on around the globe that may be affecting oil prices. Primarily, I'm talking about the strikes in Syria that happened earlier today, if I'm not mistaken, or late last night, depending on where you live. So be aware of that, and we will have to see how that happens in the how that affects the market on Monday. Now, you know, it's interesting that they did these things on, Friday, Saturday when the market is closed. But we'll have to see how the market digests that in the morning. But yeah, talk about a buy the dip opportunity here on oil. Not that I'm telling you what you should do or giving you financial advice, but yeah, that is quite the drop right back down into our channel after finally grinding over it. Gold really not doing all that much. We seem to be really stuck here around this 2050 area. Cannot seem to break free at all from that zone. So gold just kind of hanging out, not doing too much. But yeah, oil was the big thing here, if you ask me. It was finally grinding up. Looks like it was going to get to 80, and then it all just rolled over on Friday. But it will be interesting to see how that happens on Monday, or futures contracts, or the futures markets rather, open up Sunday night. That will be very telling as well. Let's take a look here at the bond yields and the U.S. dollar. So, we still continue to have this fight between the 2-year and the 20-year bonds. Both yields taking a nice pickup here on Friday, following the market, for lack of a better term. So really starting to peak up here, going into that massive rally. And look at the dollar, as though it were, kind of slowly moving up and then consolidating. We had a very big spike with the market on Friday. Of course, as we talked about, and we've talked about before, in times of global strife, people often flee to the world reserve currency. And whether you like it or not, that is still the US dollar. So be aware of that. Dollar looking pretty solid so far. Now we're going to go over the main dates in the market, and then the earnings calendar, because there are some big names reporting this week. And the main date in the market this week is there are none. There's literally nothing. This is not going to affect the market on Monday at all. I'm just going to go ahead and say it right now. So there are no dates you need to be aware of this week in the market. No big announcements or anything like that. Now, next week, we will be getting some announcements. If I'm not mistaken, it will be the inflation rate announcement. So that will be big. So keep an eye on the week following this. Of course, we'll cover that all in next week's webinar. Let's take a look at the earnings calendar, because we've got some big ones this week. Before the open on Monday, McDonald's, probably the big name right there, really going to be a mover and shaker, and that will definitely dictate how the market behaves a little bit. But of course, if there are other factors going on, especially if conflict intensifies in the Middle East, that's a big deal. So that'll be more of a catalyst than McDonald's earnings, but definitely something to keep an eye on here. Going into Tuesday before the open, Eli Lilly, major pharma company. That's going to be one to keep an eye on. Spotify as well, because who doesn't like their music? If you're into the petroleum, BP is going to be reporting before the open on Tuesday as well. Not too much else before the open. After the close, Chipotle, people will be keeping an eye on that. Not too interested in it myself, but really not a whole lot going on here. If you like Snapchat, snapping cork bridges after the close, I think everybody knows how we feel about that. Wednesday, we've got some more big names. Alibaba will be an interesting one to keep an eye on if you want to trade Chinese stocks. I think everybody knows Riz's statement and feelings about that. But we've got Uber reporting, because who doesn't need a taxi ride these days? But really not a whole lot else going on. But then after the close, we've got some names. Of course, PayPal, one that we always have been following here. Some to have been waiting for a bit of a move up, so hopefully we may get that. But then Disney is the big name here after the close on Wednesday. That's the one you're going to want to watch for sure. Not really seeing anything else on Wednesday. Let's take a look at Thursday. ConocoPhillips, definitely a good one to keep an eye on. Who doesn't like candy, right? Hershey, not really a big name, but just something to be aware of. Spirit, we talked about last week, Save, if I'm not mistaken. So that could be on your radar if you decided to take a position in that. If not, then you don't even have to worry about it. And Pepsi looks to be reporting Friday before the open. Canopy Growth. There you go. Enbridge is probably the big name here. on Friday. So basically Friday is Pepsi and Enbridge, and that looks to be about it for the most part. So definitely some big names there. Primarily Disney is going to be a big one. McDonald's, Lilly, Spotify. These are all some major names that I would be keeping an eye on. But yeah, definitely got some good earnings this week to be keeping your eyes on. And we do have some questions. If everybody or if anyone else has any questions, by all means, go ahead and throw them on. But Nikhil says, what are my thoughts on buying MTH at the current levels? Okay. Meritage Homes Corporation, excuse me. So obviously we had a bit of a rollover here post earnings. Looks like earnings and revenue were pretty solid, but yeah, obviously investors did not like something going on here. I would say, if hang on a second, please. There we go. Thank you. I would say if this continues to hold, obviously that would be, more confidence inspiring if to maybe see a bit of a bounce here, but it's really kind of in no man's land at this point. We are pretty close here to, a previous inflection point right around this 152 area that we just blew through here, on Friday. Even though the market was up, this thing got sold off really hard on Thursday. And then Friday, really a lot of indecision. So, that indecision definitely does give some credence to a potential long play, which is something you could consider, I should say. If you do want to take this, I would definitely start off with a smaller position because there's definitely a lot of room to the downside here towards the 200 simple moving average. We've got over 10 points, there, and, you've got 10 points to the upside. So we're kind of in the middle of that zone. And yeah, it's a little tricky. So I would say if you were going to buy this one, I would start small. And then if it continues to go, you can always add to your position if it does start to rally or if it starts to sell off. You want to get out, you're not out too much. Or if you want to add, you really believe in this one, it could be a good, place to add. So that's my thoughts. It's kind of a coin flip at this point. That's my opinion at these levels. It really is a little tricky with it behaving the way it is at this point, even though earnings were so good. Definitely getting close to that oversold area. Definitely something to keep an eye on if this is something you want to trade. All right, what are my thoughts on a Google long play? If I'm not mistaken, earnings were pretty solid. Yeah, earnings did well. Looks like, a good 3% beat and 1% on revenue. So very solid there on Google. Looks to be holding here over the 50, if I'm not mistaken. So this looks like a very compelling place to potentially take a long on Google if this is something you want to do. From a technical standpoint, looks really good. RSI is right in that midway zone, sitting pretty close to 50. So nothing to be too concerned of there. This behavior on Friday was very confidence inspiring. So this could be a potential decent spot to get in if that's what you're wanting to do. Uh, Again, I can't tell you either way, but looks really good for sure. Okay, Jeff says, I'm interested in UPS around 138, 139 via cash secured puts as a dip buy opportunity after the sell off from earnings. Okay, UPS. Okay, just be aware of all of those layoffs that they announced. I believe they announced like something like 12,000 drivers are going to be canned. I don't think they're all drivers, but they said that they were going to be cutting 12,000 jobs, if I'm not mistaken. Even after the contract dispute that they had and they negotiated better salaries. And now the company's like, well, guess we can't afford those salaries. Guess we'll see you later. So for this one, 138, 139, let's take a look at that. So we're looking kind of around this area here. I mean, if it continues to sell and then it holds around there, I could see that. Obviously, excuse me. Sorry about that. We've got some support here around 133. So that's something to be aware of if that's kind of your stop area. Doesn't UPS lay off every year? I'm not sure, Miguel. I'm sure that they lay off somebody every year. I don't know how much. I feel like this was more than usual, especially after the big contract win from the union there. So, but yeah, I mean, they typically do lay off a lot of their seasonal drivers. So you're not wrong there. But, you know, it's one of those things that everybody says the economy is doing great, but yet people are getting laid off. So, one of these things is not like the other, if you ask me. Definitely, we were still red here on Friday, even though the market was, blazing green, for lack of a better term. And here on Thursday, we weren't looking too good either. Yes, we did close the day green, but a really big doji candle on both days. So it doesn't seem to know what it wants to do, Jeff. That's my opinion. But yeah, if you can sneak a spot in around 138, 139, if it gives that to you, and it can hold these levels, you would be in a very good position for sure. Also considering a long USO. There we go. So yeah, that big sell-off on Thursday and Friday in oil is definitely giving you a decent entry there. I can see some nice looking support here. Let's get that drawn there. Oh yeah, look at that. Gorgeous. Oh, my lines are so solid. What can I say? Gorgeous. So yeah, definitely in a bit of an uptrend here on USO. We are seeing that, of course, with the uptrend in oil. Here, let's see, starting right around the beginning of January, been slowly grinding up. Let's look back here on USO. Yeah, right about here, and we start kind of pushing up. And then, of course, we had that big sell-off on Friday and Thursday. USO kind of captured that. So yeah, I mean, if you're looking for a play on oil, I do feel that oil is kind of a buy the dip opportunity at this point. Not saying it's going to the moon or back to 120 or anything like that. That's ridiculous. But yeah, I mean, it definitely looks decent. If you want to take an oil play and kind of track the price of oil with your play, this would be a decent spot to get in, especially if it holds my sexy line. If it holds that on Monday or even Sunday with the futures markets opening and oil looks to be running up, it could be decent. Now, I did have a follow-up question for the UPS ticker. Miguel is asking, is it possible layoffs are always priced into the stock, being a company that does cut seasonal workers every year? I would say yes, but I don't think these are seasonal cuts. It doesn't feel like it to me. I feel like it's really in response to the contract resolution that they had. And that, again, that's just more my personal opinion. But I wouldn't say that layoffs are always going to be priced in. I feel like for the stock market, we have to get rid of the words always and never. It's just like a relationship, all right? When you're in a marriage, you're supposed to abolish those terms. You're not supposed to use them anymore. And it's really good advice because the truth is, always things are not always one way or never another way. There's always gray area. There I am. I'm using the word, and I'm not supposed to. More often than not, there is gray area, with that. So that's what I'm thinking. That the driver contract priced them out of the market, and so they had to cut these people out to make sure that the company didn't go upside down. So let's get back on UPS real quick. Yeah, earnings were decent, but of course this is Christmas season, so earnings better have been freaking good. If they weren't, they're in trouble. But look at that, revenue is down over $500 million, or right around 500 million for that earnings period. So that's not really confidence inspiring. But I mean, it's UPS. It is a huge global shipper. They're not going anywhere. They're not going under. Yes, they did lose money. It's true, but looks like they've been losing revenue here a bit lately. So that's something to keep an eye on. But yeah, if it can hold, and if you want to hold through this dividend, that's pretty solid. Could be a decent long play if you want to take it for shorter periods of time, or a shorter period of time. And we're looking to get in around Jeff's price point, which is 138, 139, and curtail his exposure via secured puts. It's not a terrible choice, honest word for you. Oh, well, there you go. I hope you get to keep it, Miguel. That's all I'm going to say. Miguel said that he works for DHL and they got a record contract. So good for you, brother. All I'll say is save your money. That's all I'm going to say. Trust me, I have personal experience with that. So just be aware of that. But no, great conversation tonight, guys. Really appreciate all the great questions and the back and forth. I love this. I love it when you guys are like, well, is it possible this is happening? Things like that. That's really appreciated. So thank you, everybody, for all of our elite members who are here. As always, you guys have the best questions. And I really appreciate each and every one of you, especially you who are here live. And for all of you who are not here live, well, why aren't you? Come on. If you're an elite, come and join us on webinar. It's a blast. When Riz is here, it's even better because Riz gets really down into the grass and the nitty gritty and really gives you that deep market, recap that you're looking for. Whereas I'm giving it to you the way I see it. And yeah, it's very interesting times that we're living in right now. That's basically what I'm going to say. There's a lot going on. There are a lot of factors outside of just, is the economy good? Is earnings good? Those things definitely play a part, but there are so many things going on the geopolitical stage right now that all of the greatest earnings could be wiped out if something happens. So just keep your head on a swivel out there. Be careful as always. Don't put all your eggs in one basket. And as always, we'll see you in the market on Monday.